Here's another look at what we do to trade the Forex futures markets, specifically the 6E and the 6J. Today's trades actually were in 6E and 6J, but we're going to look at 6E because that's the interesting one and it's got a lot of lessons in it. So that's the 5-minute chart. I don't know if you can hear my voice, but I'm terribly under the weather, so excuse me for the nasal congested sound. Yeah, so I saw this. Let me get the pen. And I'd like to talk more about volume today because that is, I think, the simplest tool but the most easily misunderstood or misused. So you got one move here, correction, another move there, correction, another move there, correction. Usually things do bigger corrections after bigger corrections stroke reversal stroke pullback. So either it can do this and continue, or it can do that and fall away. So that was trend placement. Move 1, move 2, move 3. It's up into, you can't see it here. Let me just move it. Just 1 second. Yeah, if I do that, you can see that we're at 20 there, 920. And in the Forex futures markets, I've noticed that 20 and 80 tend to be areas, potential areas of support and resistance. So watch out for 20s and 80s. And as you can see, 80, we're down there now, and we've got some support. We had resistance there before. Up here we're on 20, and if you go around the chart, you'll notice that that holds true. So that was trend placement. And then, so I thought maybe we could pull back off of that high. We also had this golden mean here, and we had pivots here. So you have 1, 2, gave way here, support became resistance, and then off we went to the downside. So for those 1, 2, 3 reasons, 4 reasons, I was looking for a pullback on the 30-minute. So now we jump over to the 5-minute. And if I get the pen again, you can see what I call a chop to knot here, where you have overlapping bars, different colors, lots of overlap, more wicks perhaps, although in this case there are none, or aren't many, just 1, 2, 3. And then that gives way to one colored bars, so in this case red, mostly red, little to no overlap, mostly bodies, less wicks. So that's a chop to knot, a term I coined. We come back and we test that, so, and reject that, so that tells me downside. So when we get down here and we hit the whole number and this support resistance zone with this big reversal candlestick, I'm looking to fade that. We're looking for trapped longs because of all the reasons I stated before on the 30-minute. You know, you got the 920, you got the trend placement, 3 moves, fib, pivots, those 4 reasons I mentioned before. So although there's textbook reversal candlesticks at textbook support and resistance, you want to fade that. And it does take some practice to be able to want to do that. So I waited. You could have just shorted right here because this could indicate a trap because you got a wick against the long signal, but that's too small for me. So I waited until we saw the wicks turn down. So at this point here, now I'm really interested right here. I waited for it to close deep red against this candle and then put the order 1/2 tick above the last place where the longs would have gone long. So we would have gone, if you remember in the last video, they would have gone long at the close here and 1 tick, 1/2 tick above the high. So maybe I need to zoom in here, otherwise you can't see. Let's do that. Yeah, so 1/2 tick above the high, or the close. So all these people got long either here or here. So when this closed against them, they're thinking, damn, that's not working out very well. We've made lower highs, we're still making lower lows. This is not working. They liquidate by selling their position when it goes in the money or break even, and then they lose their confidence and they sell it off, sell their position. So I just went in here at 96.5 the first time round, but to be extra sure, once you see that rejection, then you could put your limit orders somewhere around here to short. And I was looking for a measured move on this time frame, as well as 10% off of the low as measured from here to up here on the 30-minute time frame. So if you do this, 10% off is 85.5, which is right here. So let's put that line there, 85.5, and we had a measured move from here to here. Just a second, the phone's ringing, be back in a bit. Yeah, where was I? Measured move. So we had the 85.5, which is 10% off this low as measured from low to high. And then the measured move, if you go across like this, you will see that if you measure from here, there's just about confluence there at that line. And if you measure from these peaks here, then that's probably a better fit there with some wiggle. So as I said, I got in 6.5, 906.5. It came down here, and then we saw this volume down here, which I call two waves and trees. You got two moves, and then you got a spike in volume that's 200% or higher than the preceding X bars of volume. So you can see this is what I call the tree. And then usually you get one more test of the bar that occurred with the tree. So you have that here. Then we had correction. So if we bring up the pen, this was the bar with the exhaustive volume, which is what I call the tree. And then it broke the low with less volume, and from there that's the beginning of your correction. And then it came down again. Here's your other tree, which is indicative of a bigger reversal if you have two waves and trees. This bar doesn't count, this bar does count. Once you get this trap here, because this is pointing down and this is saying up, this is saying bearish and this is saying bullish, and it's broken the low of the exhaustive volume bar. From that point on, you know that it's either going to be correction or bigger reversal. But seeing as we're looking for this bigger target here, we can assume that it's going to be a correction. So I held on until I saw this volume here, which coincides with this one. So let's remove all that. You have this and you have that, and this is this bar here. So when we got this bar with the lower volume, I'm expecting it to drop off there and get to the target. And when it didn't and we got this trap, that's where I got out at about 96, I think it was, for 2.1 R, right here. As you can see, it went up, went up to the whole number and did a new two wave and tree. So you got here, this is one, which is this bar here. Then you got two, which is this bar. And then when it got up to the resistance of the whole number and left this bar behind with this volume, that's where you needed to add back in, get back into the trade. And I just didn't have the fortitude of mind, being sick and already being up quite a bit today, to get back in. If you did get back in 901, you add here. Once this bar shows a wick and then it closes under, you add maybe either here on the close or one half tick below this bar, If you added 1/2 tick below this bar, your blended entry would be 98 as I remember it, because this is 95 and the original entry is 01, so your blended would be 8, which is somewhere around here, and then you just write it down to the target, locking in profits as you go or holding dependent on your risk management. So that was good for 98 to 85.5, which means that I left behind today 98 minus 85.5 multiplied by 12.5 multiplied by 2 minus 2 times 3.68, $305.14. So 60% of the gains not booked. I did book 40% with the $200 that I'm up so far. I may continue, I may not, because I have to get my daughter in half an hour, and then after that it's a bit busy, but I may just go ahead and see if I can catch one more trade today before the day's out. As you can see, it's bouncing nicely off of the 85.5 because we had the exhaustive volume followed by the lower volume here, the trap, which was the close under the wicks, well, under one of the wicks, and then a big green bar, engulfing bar to come back in. So you could safely go 85.5, get your stop under there at 80, and then off we go again, north. So that's it for this video, and I'll catch you all in the next one. Bye for now.